Joining me now for developing stories, Caroline Wood, senior markets correspondent on the Schwab Network, taking a look at Nvidia. Nvidia removed from a top list. So let's hear about this.
In terms of a key catalyst, but yeah, we're keeping an eye on Nvidia shares. Just checking here, down about 2%. Right now, there are a few headlines for the chip maker. Of course, yesterday, the Biden administration outlined the AI chip restrictions that would apply caps on U.S. exports to more than 120 countries beyond China. So that's, we know China is already subject to strict limits. So in terms of some of the analyst activity we're hearing, we did see Citi remove its catalyst watch on Nvidia over the Biden regulation risk. Citi removed the 90-day positive catalyst watch on shares, but did keep a buy rating on shares, $175 price target. They do point out that the new rules have no near-term impact as they're not enforceable for 120 days, but overall did say that it's a longer-term risk to Nvidia's data center sales. Meanwhile, JP Morgan reiterated Nvidia as overweight following a meeting with Nvidia management at the JP Morgan Healthcare Conference. Actually points out that the healthcare vertical business is estimated to drive $1 billion plus of annual recurring revenues in fiscal year 2026, making it one of the top vertical market segments within Nvidia's data center business. Not every day that we talk about Nvidia in terms of healthcare. And then Jefferies actually said that a few other chip names will see more upside than Nvidia this year, highlighting Broadcom and Marvell Technologies, saying we continue to like Nvidia on the precipice of the Blackwell ramp, but see more upside in Broadcom and Marvell as they ride the wave of rising demand for custom silicon. So outside of the analyst activity, we also have the information reporting yesterday that Nvidia's Blackwell chips are experiencing some overheating issues, some connectivity glitches impacting some of Nvidia's biggest customers. The information further notes that Microsoft, Amazon, Alphabet or Google and Meta have each placed Blackwell rack orders worth $10 billion or more. So they're impacted by these delays. So quite a few headlines circling around Nvidia, despite the fact that analysts are still very bullish on shares, not doing much to help Nvidia shares today. They're down about 2% and now down about 5% so far in 2025.
Yeah, and you mentioned all about Citi and this report, and but they still have the buy rating and a 175 target. I think people would be very happy to see 175 on this stock that went from 153 to 130 now, roughly, and 175 I think would be truly welcomed. Okay, good to see you. Thank you so much. Thanks. Caroline Woods. 1 year, it's still an incredible performer, folks. It's up 138%. So you haven't done poorly if you've been an Nvidia shareholder. Also worth noting that Jensen Huang reportedly has traveled to China this week, so maybe we'll get some headlines there as well. Follow that story here. Palantir is our disruptor. George Tsilis, senior markets correspondent, is here standing by to tell us all about the story, what's been going on with this real winner of 2024.
Yeah, I mean, obviously, Nicole, it's been a real winner in the past, 52 weeks. It's been up 300% as a stock, and Palantir's name has really been synonymous with the aspects of software and decision analytics and predictive analytics software, including artificial intelligence, that they're expanding their programs to, of course, the private sector, alongside the DoD, which is a major customer of Palantir. So ideally speaking, we know that this has been a very popular name also from the retail traders standpoint, but nonetheless, the company's actually done extremely well over the past few years to shore up sales growth, which is still in the high 20% range, low 30% range. But overall, in the past few years, the company has become profitable, and the stock has run up significantly over the past year. But if you look at the price action in the past, 3 weeks or so, it's down about 25%, coming off its December Christmas Eve highs of around $86. Now, across the board, even though the company's profitable, there's some elements now of valuation concerns, and there always had been as the stock has been moving higher, but there was a lot of momentum in the name. And so a lot of the analysts were, I think, reticent to get in front of that. But now we're starting to see some of the analysts reevaluate Palantir's prospects from a valuation standpoint, not necessarily from a technology or a predominant player in the AI space standpoint. But Jefferies is coming out and saying still even though that the stock price has fallen and the enterprise value to sales ratios are coming down, considering they were trading at over 50 times sales and even 150 times free cash flow just a few weeks ago. Jefferies is still bearish on the name with a $28 price target, and it's really not necessarily, even as I mentioned just a moment ago, sort of a hit on the technology or the business. It really comes down to the appetite for earnings to manifest into the price action. So if you look at even after the 20% or plus move the stock has demonstrated in the past few weeks, it's still trading as a name 170 times this year's earnings and 135 times 2025's earnings. So ideally speaking, it's still expensive, even though it's fallen about 25% off the highs.
All right, George, thank you for all of that. So the example trade pushes this back higher?
Well, that's the thing. So there's a possibility, Nicole, that we sort of see a continuation down in short term for the markets, but maybe a snapback rally as we move into the end of this month. So there's a possibility that Palantir rebounds from here, but I think that it may end up stalling out, especially considering the stock is trading below its 20-day moving average, which is around $72. So what we're going to do is we're going to play the bearish trend, the short-term bearish trend, but we're also going to give it some leeway to allow the stock to go back to that $72 area. So I'm going to sell essentially a February 72.50 75 bear call spread. So we're selling the 72.50, buying the 75 above that, and this is done for a credit of 75 cents. So the whole objective between now and expiration of 38 days is for the stock to stay below 72.50. So it can get to that level. It could actually get to 73 and a quarter. That's your break even. But I think it potentially could stall out as we move out of January and potentially February, where I expect the markets to be overall weak.
Right. George, great to see you. Thank you. Good luck there at Palantir. We appreciate it. George Tsilis, our disruptor every day.